and it's going to start at 13 million and it's
Mhm.
just going to keep compounding from there. You're going to create basically a family vault for the rest of your family to pull from if they want to start a business, start real estate, go to college, etc. And now you have a huge lump sum of money that basically funds your family's endeavors.
Wagwan, beautiful people. I'm Shanice Bryant, aka 𝗕𝐈𝐵𝐵𝐵𝐵𝐵, and welcome back to another episode of the Legally Clueless Entrepreneurs Podcast, where we share a lifestyle, side hustle, and business gems that can help you improve the quality of your life and business. Now, in case you are new to following me, I am all about finding ways to increase our wealth, whether that is through passive income, active income, creating multiple streams of income, investing, and more. Now, lately, I've been learning a lot more about the IUL industry in particular, that is the Indexed Universal Life Insurance, and how it could potentially be a great option for entrepreneurs and individuals overall. And so I am super excited to introduce to you none other than Elijah Wood, who is an indexed universal life insurance expert and has successfully helped young entrepreneurs establish wealth. All right. So, Elijah, welcome to the episode. So happy to have you. So, for my audience who have never come across you before, tell us who is Elijah and what do you do?
Elijah Wood is a personality on Instagram where really my goal is to help young athletes and Gen Z achieve generational wealth. And I do that through setting people up with IULs, which stands for Index Universal Life Insurance. And so for people who have no idea what that is, basically you can think about it as a bank account that grows an average of 10% interest. So your money's compounding. But then also when you spend the money, you don't lose the money. And so that's especially important for my demographic because we have trouble not spending money.
Okay. All right. That's good. So we're off to a good start. And you actually shared a lot more than I thought you would in the beginning, which is fine. So we're gonna kind of like dissect a bit, right? Because I'm sure my audience, a lot of people probably are wondering, what is index universal life insurance? Most people hear about term life
Yep.
insurance and whole life insurance, right? And so we're going to dive into that a little bit more. And something that you said stood out to me when you said there's a 10% interest. And something else along the lines of you somewhat don't lose money when you spend it or something. I'll have you explain that a bit. But firstly, what I want to know before we dive into the episode is why life insurance for you, right? I want to know a little bit more about your background, where you started.
Yeah,
You're Gen Z, right? You said
I'm
this is for
22.
Gen Zers, like you would consider yourself just, you're 22. Look at that, right? You're pretty young. A lot of 22-year-olds aren't thinking about life insurance. So I'm curious to know, how did you get into the insurance industry
Yeah.
and why the life insurance
Well,
industry?
really how I came across the life insurance industry was just scrolling on Instagram or TikTok, and I kept seeing these videos about people being able to leverage the death benefit for their life insurance to get money. And so what those videos were basically telling me was if you get life insurance with $1 million death benefit, you could just take out $500,000 out of your life insurance and basically have free money. Now that's not true. That's not how it works at all, but that's what got me interested into it. And then from there, I asked my professor at Texas
Mhm.
Christian University. And I asked the professor who was always talking about money. Like, this guy did crypto, he did real estate, he started a bunch of businesses. He's my mentor right now as well. And he basically knew about it and he educated me on how actually cash value life insurance works, because that's what an IUL is, and that's what those guys in those videos were talking about, cash value life insurance.
Okay. Awesome. And so you say cash value. That's one of the things that I'm curious about because, lately I've been getting into this IUL thing. So I'm more familiar with whole life insurance and term life insurance. But in recent years is when I started to do a lot more
Yeah.
research in regards to the IUL insurance and the difference, the pros and cons, and all of that. What is the difference with the IUL insurance with in regards to cash value and whole life insurance? Because I believe with whole life insurance you at least, I
Yeah.
believe you're able to build cash value as well, right? What is the difference with the
Yes.
whole
So
life
the
insurance
biggest
and
difference
IUL?
comes in two parts. Number one, the speed of which you can transfer money into the policy. So let me expound on that. So with the whole life insurance,
Hmm.
the quickest you can move a lump sum of money into your account is 7 years. With an IUL, the quickest you can move a lump sum of money into your account is 3 years and 1 day. And why that's important is because the quicker you can
Oh,
move your
okay.
money over into the product, the quicker you can build the most amount of cash value.
Mm-hmm.
And so that's why IUL is superior in that
Okay.
sense. But then the other piece, which is a difference, is how they gain interest. Because, like you just mentioned, whole life is a form of cash value life insurance as well. The difference is with whole life, you're
Mm-hmm.
overpaying for insurance, and then they give you that money back as cash value. And when the company does good, you get dividends from the insurance company to
Mm-hmm.
add onto your cash value. So that gives you an average of about 4 to 6% in a whole life policy. Really good ones, you'll get a consistent 6%. Now with IULs, you gain
Okay.
interest according to the stock market. So we have the S&P 500, Dow Jones, et cetera, et cetera. So the money is tied to those indices,
Okay.
and that earns you an average of 8 to 10%, depending on which strategy you use.
Okay. And so what if, okay, you said 8 to 10%, but what if something goes,
Yeah.
how the market goes sometime and things end up
Yep,
like
exactly.
dipping?
I'm
How
glad
would
you
that
asked
work?
that actually. So with IULs, since your money's with an insurance company, they ensure that you will never lose money.
Mm-hmm.
So if the market goes negative, you just get
Oh, okay.
0% for that year. So you didn't lose any
Mm-hmm.
money, but you didn't gain any money. And how they
Oh,
do
okay.
that is they just use options contracts. So if you're familiar with that, that'll make sense. If you're not,
Okay.
then you can just take the regular example explanation.
Okay, well, that makes sense. And I'm sure that eases a lot of people's minds, in regards to,
Exactly.
because nobody wants to lose money. So the
Hmm.
fact that there's kind of like that safety net, that makes perfect sense. Okay, so we've covered some good things here, but I want you to break it down for beginners, right? Can you explain index universal life insurance in a way that, even someone who's unfamiliar with
Yeah. Hmm.
complex
Yep.
financial products can understand? Maybe you can even like use an analogy
Yep.
to a familiar
And I'm
concept.
gonna go back to the bank account example. If you want me to do another one afterwards, I can oblige to
Hmm.
that. But basically, everybody knows how a bank account works, right? And you use a bank account to store money, right? You say, hey, I'm gaining this money. I want to put it in the bank so that I know it's in a safe place. Nobody can rob me. And so essentially, an IUL is the same thing with a few key differences, right? So, as you know, when you put money in the bank, your
Hmm.
money doesn't grow at all. You put in $10,000 and leave it for 10 years, you're going to come back and you're going to get $10,000. Another instance with the bank is that you can't loan from your money in the bank. You have to take loans from the bank, but you can't actually leverage your own money inside the bank. And so that's another.
Wait, can you go back? Can you go back to that? You said something about if you save money. I probably missed that. You said if you save $10,000 and you come back, you're not going to get that $10,000. You're only
Yep.
going to get
So I mean,
basically what you put in. Well, unless there's like no
yep.
interest at all,
I
right?
mean, you could do some accounts like a high yield savings account, but generally, if you just put your money in a checking account or a savings
Right.
account, the money's not going to grow. A savings account, you're going to grow about
Right,
0.001%
exactly.
interest. Nothing's really happening, right? And so, yeah, the
Yeah.
difference, it's also an account where you store money to keep it safe and the money is liquid. But the main difference is you're gaining interest on that money. So averaging 10% with me, because I do rebalancing strategies. So it's at 10%. Now, another key reason people put their money in the bank is because it's immediately liquid. If you put your money in an IRA, a 401k, or any retirement account, basically, you cannot access that money tax or penalty free, and it's going to take you a while to get it. So that's why people put their money in the bank. You can do the
Mm-hmm.
same thing with an
Yeah.
IUL. Your money is completely liquid, no taxes, no penalties. The only difference is it takes 3 to 5 days to get your money. So
Okay.
basically,
Not bad. It's kind of the same as if you similar, maybe a little bit longer, but like if you were to put it into, let's say, online only high yield savings bank or something, and you try to transfer the money,
yeah.
it typically would take a
And I
couple
mean,
days anyway.
let's actually go to that example with a high
Mm-hmm.
yield savings account because those are fairly decent as well, but they grow taxed as earned and not tax deferred. And what I mean by that is if it's taxed as earned,
Okay.
you're getting taxed on all the interest you're gaining year to
Mm-hmm.
year if you're in a high yield savings account. If it's tax
Right.
deferred like it is in an
Yeah.
IUL and other retirement accounts, you don't have to pay taxes year to year, so your compounding accelerates.
Hmm. Wow, that makes sense. That's amazing. Awesome. Okay, so walk us through the pros and cons, right? In action. So let's say an entrepreneur, somebody who's on the rise, they
Yeah.
are considering IUL, right? Or having an IUL life insurance policy. Walk us through a real life scenario where IUL
Mm,
could be a good fit. And then,
yeah.
where it might
Yeah.
not be the best
Okay,
choice.
so let's just get out of the way like what would not be a good fit. If you don't have a plan for how to use your money, an IUL could get you into trouble if you're heavy on taking loans out from it because it is a product where you can take out loans.
Mm,
And so, what I mean by having a plan is because since it's an insurance contract, you have to put in a certain amount of money per
mm-hmm.
month or put in an extravagant amount of money at the start so that you don't have to worry about it again. But if you're just skating by bare
Okay.
minimum, then it's not a good account for you, especially if you're not planning out your money. So basically, if you know yourself and you're like, hey, I want to get this account, but I don't have enough capital yet to get into it, and I know I don't know how to really manage my money,
Mhm.
then you want to stick to a penalty free account, like completely penalty free account, like a bank account where it's just in your checkings or savings.
Okay, that makes sense. And I'm happy that you mentioned that because that's another question that I had. Like, do you know the minimum and maximum
Hmm.
requirements in regards to deposits that you can put into these IULs? Is it based on age or what other
Yep. So it's
factors is
based
it
on
based on?
age, sex, and health rating. Pretty simple. So for myself, I'm
Okay.
22. My minimum is $30 a month. Obviously, I want to put more money into it than that
Okay.
because you're putting in money to use it.
Mm-hmm.
You're not putting away money and losing access to it. You're putting away money and you still have access to it and your money's compounding. So you want to put as much money as you can into it and then have like your day-to-day spending or emergency fund in the bank. But as long as you're above that minimum threshold, like for me it's $30, you're good.
Mm-hmm. Okay, that's awesome. And I love the compounding interest aspect of it. I'm all
Yeah.
about, compounding interest. That's why I don't put, a good bit of money just sitting into a regular savings, because the most you're going to get from a regular savings account is really
Yeah.
0.05% maybe. So I'm all about those higher yielding interest accounts. So that's phenomenal. That's good to know. And I'm sure that's going to attract a lot of people as well
Yeah.
to this type of insurance, right? So with that said, there are claims, right, that the IUL life insurance could be a potential tool for building generational wealth, right? Can you elaborate on how it can work in, let's say,
Mhm.
an estate planning strategy, and what factors to consider when
Okay, cool,
using it
cool.
for this purpose?
I'm gonna give a general example and then I'm gonna give you a real world example. So
Mhm.
generally, how an
Okay.
IUL creates generational wealth is because it compounds perpetually. So the compounding never stops because you can't lose money in a market crash and you don't lose money when you take out of it. And so that means your compounding never gets interrupted. So it keeps accelerating the more years that go on. So if you have an IUL account and you live to your
Mm.
70 and you pass it on to your kids, they're going to inherit tens of millions of dollars at least. And then it's going to keep compounding from where it started at, say, let's say 10 million. Then it's just going to keep compounding. And if you're getting 10% off of 10 million, that's a million. And then you can see that just keeps growing. Why I picked that number, I'll show you my real world example.
Mm.
So I'm sure you would say
Mm-hmm.
having $1 million at retirement, like that's not unfathomable at all, correct? Yep.
Correct. Right.
And just being
Have the right
consistent with it,
strategy, and
right?
yeah.
Especially if you start at a young age. So
Hmm.
what I did,
Right.
I illustrated $1 million at age 60 in 1999.
Okay.
So every single 60-year-old in 1999, if they put their money in an IUL account and the market did what it did until 2024, they would have a little over
Mm-hmm.
$13 million in their IUL account today. And that's with them taking out 60K per year. And they could have taken out 100K per year.
Wow.
You can take about 10% out of your IUL and be safe per year in retirement. Yep.
Oh, wow. Awesome. That's good. That's really good. So it's basically like
Yep.
living off your investment, right? Wow. So you can live off of it per year, as well as, let's say, when you pass, your beneficiaries will still be able to
Yep. So what's
benefit
going to
from
happen is,
what's
let's go
left
back to
over.
that $13 million
Okay.
example. You're going to have a trust set up and you're
Mm-hmm.
going to say the trust is going to own another IUL, and when you pass away, your 13 million is going to go into that trust, and it's going to start at 13 million and it's
Mm-hmm.
just going to keep compounding from there. You're going to create basically a family vault for the rest of your family to pull from if they want to start a business, start real estate, go to college, etc. And now you have a huge lump sum of money that basically funds your family's endeavors. And I forgot to mention real quickly, I also did that same illustration from 1999 with a traditional account. So they took out 60K
Mm-hmm.
per year and they ran out of money. So they were at $0 in 2017. So that's the stark difference between the two accounts where you don't have any interrupted compound.
Okay. Well, that's amazing. That's good. So I see truly where that generational wealth builder
Yeah.
aspect
Yeah.
comes into play. Like literally, people usually use the term generational wealth, and some people use it lightly or casually, but this truly sounds like
Yeah.
it could be a
And
way
it's tax
to
free. It's
build
life insurance, so it's
generational wealth.
completely tax free. That's the other part.
That's amazing.
Yeah.
That's
I
amazing.
do want to get into
Wow.
real quickly because I
Okay.
kind of skated over the question of how it could help business owners, right?
Mm.
So A lot of business
Okay.
owners have a working capital account, and some of them use a bank account. Some people just raise money, and some people get loans from the bank. With an IUL, essentially, you become your own bank. So you build up your money into it over the years. And then whenever you need to do something for working capital, you can take a loan from yourself from the IUL. So basically just take out the money like you do a bank, use it for your business, get a return on that, and then just recycle the money back into your IUL. And let me stop right there. You don't have to recycle the money into your IUL because you're borrowing from yourself. But if you do, you're just paying yourself back and increasing your death benefit. The other piece I'll say with this, and a lot of people love this aspect of an IUL. I'm not there yet because I don't own a credit card. But for the people who love their credit card, you can actually use your credit card to fund your IUL. And then you can increase your credit score and gain credit card perks from funding your IUL. So essentially, you fund your IUL with your credit card as you're going money into it, and then you get your free flights, free trips, free whatever you get from your credit card. And then you also can use the money that you're funding in the IUL to make a real estate investment, to make an investment into your business, do whatever you're doing, and you can use the same dollar like 3 times.
Elijah, you are brilliant. You are brilliant. Like, you know your craft. Like, this is why you're considered the expert
Thank you.
in
Thank you.
this field. Like, that's brilliant. Like, I had no clue. I had
Yeah.
no clue
Now I
that you
have
could
good
actually do that,
mentors.
that you could fund it. Wow. That's amazing strategy, especially for people who love,
Yeah.
using their credit cards for
Mhm.
perks, right? For benefits, like cash rewards, all of that. And the fact that you're able to use your credit card to fund it, that's amazing. You're
Oh.
22. You said you don't have a credit card. Is that on purpose? Don't mean to put your business out there. I'm sorry.
Yeah.
I'm a little
Well,
nosy, but
here's the
is
thing
that on
with
purpose?
credit cards, right? Because I grew up broke, right? And so whenever I thought of debt,
Mm-hmm.
I just thought it was a super bad thing. Using debt as leverage, it was a foreign concept to me. And then as I was just going through school, I just really never had a use for the credit card because I just got so used to paying for everything in cash. But once I get some time on my plate, I do plan on getting a credit card. I have a guy on my team right now who's like a credit card guru who does like all the arbitrage strategies with them. And so I plan to get with him so I can get the right credit
Mm-hmm.
cards and then start feeding into those strategies.
Okay, that's awesome. And you were
Yes, I grew
raised
up in
in
Michigan.
America, right?
Yeah.
Okay. Okay, that's awesome. I just asked because there's nothing wrong with that, okay? Let me just put that out there. There's nothing wrong with people who, or you choosing not to have a credit card. You know yourself, and if that is something that you don't want to get
Yeah.
into, like, most Americans, then I think that that's a beautiful thing. It's
I know.
awesome. I
That's
think
why
I lost my
I
train
do
of
want to
thought,
put in one more
but
thing. Like you mentioned knowing yourself, right? I
mhm.
do know myself that it's gonna have to be a very intentional, planned out strategy to get a credit card for me. Because if I don't do that, I'm gonna forget to pay it off, and then we're gonna go downhill from there, basically. So yeah,
That's good. That's a good point. And I do believe that in order to
yeah,
effectively use credit cards, it has to be intentional, like you say, right? Because otherwise, if not, you're just going to go into that rabbit hole of just spending, making purchases every day, like, automatically, and not paying it off how we're really
exactly.
supposed to pay off credit cards, right? Pay it off monthly. So we're not
Yeah,
accumulating those interests, right? And just
exactly.
basically benefit
Yeah.
from it, the rewards and all of that good stuff. So that's amazing. That's amazing.
Thank
I
you.
definitely
Thank you.
admire you for that.
Getting lucky over here.
You're brilliant. Okay, awesome. Awesome. Okay. So beyond the death benefits, we probably covered this, but so there is a death benefit
Mhm.
aspect, right? Which it is crucial. Now, IUL does offer like a cash value component. How can, well, I think you probably mentioned this already, but feel free to kind of like reiterate. But how can entrepreneurs like leverage this cash value throughout their lives? And well, you did say that there's no necessarily tax
Yep.
implications to be aware of, correct? I don't want to you don't have to get too much into the tax aspect of things, because I know this type of thing is usually reserved for like, CPAs. But how can they leverage the value through just throughout their like day-to-day lives,
Yep.
entrepreneurs in particularly?
So essentially, it's just a going back to the bank account, right? It's just a bank. Hold on, real quick, bro. I'm on the thing. So going back to that, I'll go back to the bank account example, right? Entrepreneurs can use it in their
Mhm.
day to day life because they're already using a bank account. It's the same concept, right? So if I know I have to make a sizable purchase in about a week, I'm gonna call my insurance company. I'm gonna request the amount of money that I need from my IUL, and they're gonna direct deposit that money into my
Mhm.
account tax free in 3 to 5 days. And so literally it's just a store
Mhm.
of value that you're gaining interest on, and that is tax free. Does that make sense?
That makes sense. So earlier you mentioned something about, I did ask what factors contribute to like how much you're depositing or something like that. So essentially, when someone sits down with an IUL expert or strategist
Mm.
or like advisor, right? Essentially, they'll walk them through their goals. So based on, let's say I want to have, let's say, $2 million by the time I'm 60 or 70, based on my age right now, my gender, like you said, health condition, that will determine my minimum, right? The minimum amount that I need to put into this
Yeah,
IUL.
so I mean, with that, you really want to go at it from a different angle. And the angle that you want to go at it from is number one, how much money can you put into the IUL first? And you want to ask that because that
Right.
decides how myself, the expert, is going to structure it. Because let's say you're only, yeah, because
How
let's
much
say you're
can you
putting in
afford?
$1,000 per month, and that's all you want to put in.
Mm-hmm.
I'm gonna put $1,000 per month as your maximum or near your maximum. And I'm gonna do that because let's say 1 month you can only put in 500. Well, now you're not in trouble
Mm-hmm.
because if 1,000 is your minimum is gonna be 100. So if you put in 500, you're still overfunding it, and you're making your policy way more efficient. Yeah.
That makes perfect sense. Okay, so you want to approach it based
Yep.
on
And I mean,
the
if we're talking,
maximum and not the minimum.
yeah.
That's key, y'all. That's key. So if you're listening in,
Mhm.
make sure that you're taking that in. That is so valuable. That makes sense because life does happen, right? Maybe you decide to take a sabbatical and you
Mhm.
start making a little bit less, or you lost your job or something. Things do happen. So that makes perfect
Yeah.
sense to approach it that way versus, okay, what is the
And
minimum can I put in?
I'm gonna try to formulate this question correctly, but really a really good question to ask your advisor just to see if they know
Mm-hmm.
how to set it up correctly is
Mm-hmm.
basically you want to ask them after they show you the illustration, ask them to design you a policy that would make them the most amount of money. And why I say that
Hmm.
is because if they're already
Mm-hmm.
showing you a policy that's making them the most amount of money, then that's a super bad policy because in order for you to get the best policy, they're making the least amount of money because they're giving you the least amount of insurance. Basically,
Oh, so it's
yeah.
basically like a trick question.
Because all you're paying for is your insurance and the IUL. So if you get an IUL with $1 million worth of insurance, but you're only putting in an amount of money that can qualify you for $200,000 worth of insurance, you would rather get the policy that gets you $200,000 worth of insurance because now it's cheaper and you're maximizing your cash value. So more of the money that you're putting in is getting invested for you rather than paying for insurance costs. Yeah. If you just want, a policy
That
that's
makes
going to get
sense.
you the most amount of insurance and you don't have a lot of money to play around with, you're going to want to get a term life insurance
Mm-hmm.
because that's going to get you the most amount of insurance for a low amount of money. It's for a period of time, but usually
Mm-hmm.
when people are in that situation, that's just what they're looking
Mm-hmm.
for. I will give a disclaimer though. A
Yeah.
IUL still gives you the most amount of insurance over time because your cash value grows the account. So if you start off with $100,000 worth of insurance,
Mm-hmm.
but you're 20 years old, and by the time you're 70, you now have $20 million in your cash value, your family's going to get $20 million, not $100,000.
Mm-hmm. Right. Exactly. That's good. That's amazing. Listen, I wish that I knew about IUL life
Yeah,
insurance when I was 20. Like, I mean, I'm still in my 20s now,
yeah.
fortunately, barely, but I'm still in my 20s. But I really do wish that I knew about IULs in my earlier age. So, or earlier stages of life. So, around maybe 19 or so, when I used to work in the financial industry,
Mm,
that's when I was first introduced
okay.
to life insurance. And I did take out a policy when I was about maybe 21 or so. It was like whole life insurance, of
Mhm.
course they sold me, of course, on the benefits of whole life insurance. Which I think is still good. You don't have, it
Yeah.
doesn't change based
Mhm.
on the term, right? After 20 years, 30 years, it's still the same. So that's what really sold me on it and the building up of the cash value. Now, had I been introduced to IULs,
Mhm.
I would have definitely done this. And then so I got that when I was 21, and then around maybe 24 or 25, like
Mhm.
I was transitioning in between jobs. At the time, like I had lost job or something, and I was trying to find every way that I can cut
Yeah.
expenses that I felt like wasn't important, right? And I ended up cutting my life insurance at the time. And I wish, looking back, like
Mhm.
that's one of the things that I regret doing because it was not a lot. It was maybe
Mm.
like $30 or something like that a month. Right. And so that's something that I wish I did not do. Eventually, of course, yeah, I went back to get it, but eventually I'm now, I do have life insurance now, but
Mhm.
that disrupted
Compounding.
that policy. And
Yeah.
I could have been building cash value over the years.
Mhm.
So that's one regret that I do have. But hey, still in my
Nah, for
20s,
sure.
still have time. And definitely this is something to
Mhm.
consider. I'll be thinking more on.
Yeah, let me ask you a
Yeah,
question.
for
With your
sure.
policy that you have, are you able to see like the rate of return you're getting in the whole life? Okay, what about are you
Yes.
averaging? Was
Hmm.
I correct in the 4 to 6%? Okay, got you, got
Yeah.
you.
So 10% is like, that's amazing. I love seeing, like,
Yeah.
when I go to my high yield savings account and I see that compounded interest, I'm like, I love seeing that. So this definitely is attractive. Yeah, for sure. So where can people learn more about IULs? For people, they may want to talk to you one on one, right? They may want a consultation with you or just learn more about this
Mhm.
IUL thing, maybe on your platform. Where can people
Yeah.
find you? And how can they maybe like book a call with you or sign up for an IUL policy? Give us that information. Like if you have, Instagram, of course, websites,
Yeah, of
where can the
course.
people find you?
First, my website would be adwoodconsulting.us. And you can just go on there, go to the contact us page, get with me that way. But then also on Instagram, it's Elijah on Instagram. And so I'm pretty responsive on there, but I will just say the value of knowledge. If you want to get valuable knowledge, 9 times out of 10, there's a price barrier. And so, why I say that is because a lot of times people look up information about financial products, all financial products, just on Google. And it's like, hey, the information on Google is free. So you're not getting all the nuances and details because these are products, just like a candy bar is a product. Yes, you know the general idea, but each company has a different product, so to speak. And so
Mm-hmm.
basically, if you want the detailed and correct information, you're going to have to talk to an expert. You can get an idea online, but a lot of it is incorrect because it's just too general and it's generalized to be safe.
Mm-hmm. Yeah, that's good. Awesome. All right, beautiful people. So I will have all of his contact information, his Instagram, website, all of that in the show notes. If you're watching on YouTube, you can find it in the description. If you're listening on any of your favorite podcast platforms, the information will be in the show notes.
Awesome,
Right?
awesome. Yeah, thank you for
Awesome.
having me on,
Awesome. Okay.
Shanice.
Let's see. Absolutely, Elijah. So it was a pleasure having you on here. Happy you were able to make the time for it. And listen, if you are shopping around or you're in the space for life insurance, IUL life insurance is definitely one to consider. I mean, Elijah broke down all of the benefits, pros and cons, of the IUL life insurance policy. So definitely something to consider. Again, you can go over onto his website, check out his Instagram to learn more, book a consultation. But whatever you do, make sure that you are at least covered, right? Make sure that you have some type of life insurance policy. A life insurance policy does go beyond the death benefits, right? There's also the cash value to it, right? Building wealth. So definitely make sure that you're setting yourself up for success, not only for you, but for your generations to come. Now, if you did like this episode, be sure to hit that like button, follow this podcast on your favorite listening platform, subscribe to the channel. That way, whenever I post a new video, you'll be the first to know. Until next time, beautiful people, it's your girl 𝗕𝗂𝐿𝐵𝐵𝐵𝐵𝐵. It was an absolute pleasure. Let's continue to grow those businesses together, and I'll see you guys later. Be blessed. Bye.